Welcome to Momentum Monday. Today is March 12th, 2023. Howard, since last Sunday, we had like three banks less, fewer. Three banks are gone. What's going on?
I've been driving for 6 hours, listening to bad takes on it's been a week of just maybe the weirdest week that I can remember since '08. Obviously, COVID. That was a panic. This was this was the dumbest. Obviously, not dumb for the people that were freaking out as they should have, but it was really a reminder how little people understand about markets and finance. So they took down Signature Bank tonight.
Yeah, it's gone. Yeah.
It's weird. You have regulars gloating over it, and it's just such bad behavior on every side. I know you're just a trader, but I'm trying to digest the stupidity. And it's late here Sunday night. I'm in San Diego. We're both in San Diego tonight, so maybe I'll see you this week, buddy. But as a venture capitalist who's been out of the markets here for a little bit and in T-bills, as we've been talking about, this will be my best performing week just because I survived, and T-bills are probably going to get a bit. So as we're speaking, the backstop happened. So catch me up. Backstop happened tonight.
Yeah, I mean, basically
futures are ripping, but they also took down Signature Bank.
Yeah, so three banks. I mean, SI.
What was it? Yeah, SI was last week.
It was voluntarily, obviously, and then you have the Silicon Valley and Signature Bank. Basically, all the banks related to crypto, the VC bank, Silicon Valley Bank, they're gone. It seems like they're gonna save everyone else. All deposits are guaranteed, even the uninsured ones. And also they announced a new liquidity facility, which will allow banks to pledge.
What'd they name it? They gave it some stupid ass name.
Doesn't matter, but essentially they can pledge their long-term treasuries and mortgage-backed securities and at their original value. So they can basically cash them out at their original value.
So they took no interest rate risk, basically.
Without basically the banks, without having to wait until expiration date. So which is pretty inflationary, obviously. And
I'm gonna go on a little riff here. Here's what we get. While you were, and again, big tech has not acted well. But again, if you don't police people, they just at that size don't act well. But while we were so focused on Facebook, right, pointing the finger because it was fun, you got Norfolk, you got trains not investing. So you let the old school people who always bring us down, transportation, infrastructure, true infrastructure. What Norfolk took down a whole fucking state, basically. And they're off the front page already. Meanwhile, and then you have, of course, Silicon Valley Bank, which was one job, not to blow up. Like you basically have one job, a spreadsheet. Their whole job is look at the spreadsheet, understand duration risk of your bonds. Like they just didn't even need. I mean, yes, there was hidden leverage in their interest rate trade, in the bond trade, but oh my God. And then you have the FDIC or whatever that screwed this thing up. And we live in the internet time, and they could have just backstopped depositors. I mean, it's a no-brainer. You backstop, the depositors did nothing wrong. Okay, we're not bailing anybody out. Friday night, they should have just said, listen, before Twitter and Reddit and everybody gets carried away, because that's what happened. Had to deal with 2 days of knuckleheads and rumors. They waited till tonight, just before the futures open?
Yeah, I mean, they did it a few hours ago, basically. And I know that some banks,
the equity at Silicon Valley Bank, I mean, this is crazy. Listen, the executive screwed up. It's terrible for people that have known there, that have worked there for 10, 15, 20 years at Silicon Valley Bank.
Almost 9,000 people losing their jobs.
Weren't at all responsible right? And again, a bunch of executives, all you got to do is look at the spreadsheet. And I don't know, you've got the right blaming, calling it a bailout. You've got, whether it's Trump or the Republicans repealing Dodd-Frank, which wasn't great, don't get me wrong, but you got no stress testing on banks under 50 billion. So everybody's pointing and no one's doing the basic work. And so you basically almost had thousands of startups. These are young people who don't really know banking and finance, and we'll get to that in a minute, but basically couldn't meet payroll. Like, they don't, their money wasn't at risk. They thought it was in a bank. So I think, listen, the Fed left rates too low. Then they took them overnight to 5% or whatever, 4%, 3.5%, whatever you're going to call it. The banks did not bump up interest rates on your cash deposits. So everybody took their deposit, anybody in the know took their deposits like me and went treasuries, which really isn't a bank deposit. So the banks had no money, right? Our money's smart money sitting in treasuries and money market funds. So the banks had no real deposits. And of course it's going to happen. So the bank needs to make its quarter. So they don't want to bump, they had you at 0% in your checking account. God forbid they offer you 3%, so they'll only make a little bit of money. They kept it 0.5%. So to make their quarter, they blew up the whole company. So really what it comes down to again is what we learned in 2008. These banks can't be public companies because it completely goes against depositing your money when they've got a free ride to make a nice living. But because they're going to be a public company, they do everything for the quarter and nothing for the long term. Right? So if we pull up a chart of JP Morgan, for example, where everybody now is going to flood into, and again, the chart's a piece of shit. Go back to the monthly. So again, I don't know, it's the S&P. Great. It added no value. Like if we took it out of the S&P wouldn't look any differently. It should be a private company. So what Kramer called it a fortress. I go, the one thing you don't want to own in this world is a fortress, because that's what everybody's trying to take down as a fortress. So, the same lesson over and over is the banking system's truly important, and you leave a few people in charge of something that's important. And when you're not looking, they blow the damn thing up.
Look, even JPM, Howard's, I just read that they only have 28 billion in cash and over 3 trillion.
Yeah, why would they have money in cash? They put it in treasuries themselves. They're all leveraged.
Yeah.
No,
So
I mean, this isn't going to go away anytime soon. Again, I don't like the stock market, and I've said that for a while now, because it just feels too rigged and there's so many black swans. It's supposed to be a black swan supposed to happen every once in a while. They're happening like every 3 months. And the other thing I would say is let's pull up a chart of GME, because this is what the bank run looks like. There's going to be a lot of finger pointing in the next few weeks.
Oh,
remember what?
Okay.
So the internet, what happened in 2020? In hindsight, of course, because no one knew. But in hindsight, if we look at this, that's Silicon Valley Bank and the opposite. So GME and the internet and COVID and a smart, promoter. And what at the time, maybe thought it was a value stock or not, got together and had this incredible cocktail, obviously because of the time. And the hedge funds that thought they were smarter than everybody else truly didn't understand the internet scale of what everybody clicking a buy button could do. They understood their models from like what hedge funds can do, but they really didn't understand internet scale and social network scale. And all that concocted and blew. That's where you see that stock price go to where it went. It was a value stock for sure. Otherwise it wouldn't still be at 10, 15 bucks. So it was undervalued. But in order to get to that true valuation, look what happened because of the internet, right? It blew everybody away. So if we look at Silicon Valley Bank and the regional banks, I'm going to pull up the regional banks or Silicon Valley Bank. It's the opposite. Silicon Valley Bank was broken. There's plenty of people on Twitter, stock twits, that commented on this over the last year. They didn't have an audience, so no one listened. So there was a hole in Silicon Valley Bank, and the internet finally exploited it. And because it's no different than the movie Wall Street, when the bankers used to say, it was wreckable. Well, Silicon Valley was wreckable because they left themselves vulnerable, and the internet fixed it in one day. And Silicon Valley Bank was about $280. This isn't like 08 where it took months. This was like 3 days.
Much faster, yeah, exactly.
It's $280 stock. It's out of business.
Mm-hmm.
I mean, that is the internet. And so I don't know how you can, I guess you index, but I mean, again, like until, things calm down, and I don't know what that looks like. This is a great market for people that understand vol and really do their work. But man, the internet is creating all these black swans because there's holes in the system. So, I think, Yellen in the end, of course, did the right thing. If people deposit money, until you fix the rules, you got to protect the depositors, or if the whole system crashes, right? So that's good news. But what sucks is we all knew that the Fed raised rates too fast. And now on a Sunday night, when no one could be in the market, they announced this thing, and the market, what's the futures up? 2%? Because the Fed overreached.
Yeah, 2%. But things can change obviously by tomorrow. I mean, we can have a 5% day, or also have a CPI on Tuesday.
No. I'm not like bullish or bearish. I'm just saying this is all way over my pay grade. And there's so many experts thinking they understand this, and they don't. The system is kind of broken. The country's, dealing with the internet. It's so much misinformation. And, we've been pulling plugs out because of deregulation, and nobody's overseeing anybody. And, you pull enough plugs out, and all of a sudden you have these explosions, and there's nobody there to fix them. So I think they made the right decision. Well, I mean, I know they made the right decision. They didn't bail out the equity.
And the bondholders too. Yeah, both of them are gone.
Seems the bondholders too. Yeah, I haven't gone through all that. And I think the really good news is that people got this. When you talk about money, that's when you get an education. Fire and money, right? If you burn somebody with a flame, they know what heat is. And when you take their deposits away, when they're doing everything else right, and they thought they were protected and they weren't, like there's so many young people that just thought their money was in a bank. And you can't learn until that thing gets till the fear of that pulled out. So there was a lot of people that got an education over the weekend, not in the stock market. They didn't get an education in the bond market. They might now understand what interest rates really drive the economy, but they definitely got an education in cash management and what banking rules are. So that's good. That is like the big positive. You cannot learn that until you have fear of death.
Yeah, it seems like it's positive for crypto too. Like I wouldn't be surprised if
crypto is positive for not crypto, it's positive for the blockchain and for Bitcoin if you understand how to actually store it and use it properly.
Yeah, exactly.
Scams will continue. Crypto as itself, tokens, I'm not sold on. But the idea of like literally, you call it self-custody Bitcoin, that's interesting. Like if the bank, they have to fix this $250,000 thing because people like having 20 bank accounts. If you have a large company, 100 employees, and you got to do payroll of 2 to 5 million, every 2 weeks, but you can only have 250,000 of coverage, and you got to hire an extra 2 people to run treasury. I don't know. It gets really expensive. And we should be thinking about the opposite thing, where there's faith in the system and the rails that, and the regulation, that people can just do business. And this was a huge blow to that. Like I said, the best news is people got an education over the weekend in like, oh my God, this is real. So I think that part is luckily a lesson learned, and that'll be forgotten in 15 years or 10 years, but you're going to see a lot more people that really take an interest in this, and that's important. Like you and I talk about markets all the time. We think it's great, and so these will all make the market more resilient. These problems, we needed people to really understand. And how do you teach them? By like taking it away from them. And that was a pretty scary weekend. I
Yeah,
mean,
I
we
mean,
were dealing with hundreds of startups and trying to like accumulate data, not on how the company was doing, but like, could they meet payroll? That's bananas. That's not in my job description.
but at least you saw that there were so many private solutions to that issue, like
Yeah.
people stepping up and offering
Okay, so that's a great point.
solutions.
So that's the other great point. As negative as the internet and communication and Twitter were, like with the fear mongering, underneath it, because of the tools and communication and liquidity, there were so many ways to solve this problem. But that's not an excuse for the lackadaisical regulation, and that's not an excuse for Janet Yellen to take 3 days. They could have backstopped this Friday night and killed a lot of the weekend spam and bullshit, because it was an easy decision. Bailing them out and getting offers over the weekend, fine. To save equity holders and bondholders, that's a different discussion than stressing out a generation of entrepreneurs to teach them a lesson. Now, granted, lesson learned, that's the positive. The other lesson is there was plenty of liquidity in the system, even though it wasn't on rails, it was just hedge funds and private equity and potentially VCs, that there was, backup money in the system for sure.
Yeah, so you're saying that they should just increase the deposit insurance like to unlimited, or it should be?
I mean, that's not my job, but 250 is just feels like.
But even if it's 5 million, I don't know, maybe that will help a lot of people. But we had someone like Rockhill, they had 500 million with Silicon Valley Bank.
Yeah, but we don't know if that was in a sweep account. Like, again, I don't trust the media, just like Trump didn't trust the media. Again, is that off balance sheet or on balance sheet? And that's that, I don't have all the details of how Roku held it, right? Like, we have accounts at banks and then we sweep it into, a off balance sheet thing. So again, I'm not going to go granular because there was so much misinformation. But again, that's a lot to teach a 25-year-old that's got a startup business that raises more than $250,000, and now all of a sudden with 2 people has to be in cash management. Again, good that people got the education, but I mean, that is not something that should be the first thing that people have to think about. So, there's good and bad. I think, interest rates, I think look at the treasury, right? Like, that was the trade. Silicon Valley Bank getting out of that trade was probably a bottom. So we should see rates
pull back, yeah. At least in the short
term. We should see rates pull back. And so, like, think about the money flows. I'm in treasuries, right? I'm in short-term treasuries. It's not like it was a great trade, but I'm going to have an option, right? Like, if I see rates easing, that's going to let me take money out of treasuries and back into risk, So, but I'm not there yet. Like, I'm not going to rush in because Janet Yellen, not bailed out, but like backstopped a system that, of fools. So it's going to be a lot more you need to show me. But this is probably overall, a much needed cleansing and wake up call. So from that standpoint, I'm a little bit optimistic. And technically, where are we at?
Yeah, it was really important to kind of calm people down and at least slow down the bank runs, because we would have had probably 20 other Silicon Valley banks.
It was obvious. Like, you could say that on Friday night. Before the internet, you could wait 3 days. But in internet time, waiting 3 days is crazy.
But that doesn't really change the fact that many banks are basically essentially bankrupt in a way. They have so little cash, so little assets to compare to their investment portfolios.
It's a different type of leverage in a way, right? Like, this treasury leverage, you know what I mean, is different than your dog having a mortgage in 2008 and literally the system was broken. Like this is way different. It may be just as bad long term. That's what I'm saying. I don't understand it all. So it's not like I'm going to rush back into stocks and risk assets. And this is what people don't understand. It's, let's truly see what the damage is to. It's not like VCs are going to quickly now start writing checks again. Like things are going to slow down.
Yeah, for sure. Everyone's going to wait.
Yeah.
And volatility.
We were waiting 2 years ago. We were aggravated with the prices of deals. Like, I've been on here saying that. Like 2 years ago, it was like, what are you thinking? These valuations are absurd. Like, it's one thing to trade public risky valuation and you can change your mind. It's another thing to be locked up for 10 years in an overpriced asset, And so that's not going to happen overnight. So where's the strength? Is there any? Like the regional banks are going to take forever.
Look, there was some strength last week before the banking fiasco. Obviously, semis definitely stood out. The SMH versus S&P.
The machine trade.
Ratio, it made new 52-week, new multi-year highs. But if the market is really worried about a recession and starts to price in recession, semis are going to get pretty hard. It will be one of the hardest hit sectors. But before the bank fiasco, they were definitely showing incredible relative strength, but everything changed on Thursday. Yeah. And I think we'll see the implications of that in the next few weeks, even months.
Yeah. Again, I don't know about recession, but like slowdown, meaning everything slows. The velocity of decision-making by the masses will slow down.
What we're seeing this weekend is that already the US dollar is pulling back while the main cryptocurrencies, Bitcoin, Ethereum, they're rallying. They're up 7% this weekend. So that's what I'm thinking, that maybe we have reached a point where some companies will say, maybe we're going to keep 5 or 10% of our cash in Bitcoin and just
no, we're not there because self-custody. Like most people can't even figure out treasuries, so don't fall for that. Like treasuries were paying 5%, and people weren't using them, right? Like so.
Yes, well, we have someone like Schwab. I mean, a pretty significant drop from 8 to.
Okay, but I'm saying I'd rather buy Schwab. Like Schwab will rally tomorrow, so it's like I'm saying like. Schwab could rally 7-10% easily tomorrow on this news. That is a raid, man. Yeah. Wow.
Since now they own also TD Ameritrade, they own the entire investment advisor business in a way.
Yeah, they have a monopoly. So again, while you were worried about Facebook, this is what gets me so mad. While you were worried about you were worried about Facebook, Schwab built a monopoly in the advisor business. They have a pipe. And they're not great. They're not investing in tech, okay? At the pace that Facebook and Google and Amazon are. Schwab is hiring people. Believe me, I have no confidence in that. Let's pull up Schwab for a sec. How many employees does Schwab have? They need 10 employees. Like I'm being a little bit sure, but they probably have 70,000 employees. To what? Help you index? Right? If they really believe their own shit. Right? They need, look at Vanguard. Like, what is Schwab? Why is Schwab there? To add volatility to the market? Okay. So in a world where they are doing nothing except holding my money, and obviously based on the last week, we don't even know if they're doing a good job of that. And you've given them full control with TD Ameritrade of the advisor channel and like a pipe that Apple would dream to have. We're asleep at the wheel. They're not investing in tech. The RAs that use TD and Schwab complain all the time. It's not like Apple users complain. Apple users love Apple. Go talk to any RIA and ask them for the fees that they're paying to Schwab TD. Is the technology good? Is the reporting good? Is the client service good? No. And guess what? They don't have to answer to anybody. So be careful what you wish for. Like there's a lot of decay under the surface while you argue about big cap tech. And by the way, like I said, there's plenty of reasons to be mad at big tech. Don't get me wrong. But while we've been focused on them, the banks they've been up to no good. So, and the banks are the ones that really moved this market. While tech was going down, I didn't hear any complaints, but all of a sudden when Silicon, one of the, top 20 bank goes down, the whole economy was on the brink. If tomorrow you rush out to your regional banks across the country and ask for your cash, you can't, the game theory of that is you can't blame someone for wanting their cash out. It's asymmetric. If you fear that your money is going to go to zero, you're going to try and get it. So we were in a dangerous spot there. So let's see how it plays out. I'm excited to at least not have to worry about deposits. Where do you bank? I'm not at, but you don't bank at Silicon Valley Bank.
No, I use Bank of America. So
yeah. So if you're not at a big four bank, and guess who we just helped here with this? Everybody's going to run their money into big four banks again.
yeah.
Even though she's guaranteeing deposits, trust me, a lot of mid-tier people that were using regional banks, they're not going to rush back into regional banks. They don't want to go through another weekend like this. Like I said, if she had come out Friday yelling and said, listen, this is nonsense, depositors, but I'm not going to go through another weekend, so where are we going to put our money? We're going to put our money in a big four firm because we don't want to get fired for having client money at a regional bank, because we don't want to go through that again. So the things are going to slow down. So I wouldn't chase things just because the market's up 2% tomorrow.
You're right. I don't think this issue is over, by the way, because a lot of people still going to withdraw their cash from the smaller regional banks.
Of course.
So
because you don't want to go through another weekend that you just went through.
Yeah. All right. Let's end up with this if you want to, and then
yep,
just catch back next week. Okay. Thank you, Howard.
All right. See you, everybody.
Bye.